If you've ever had a bank manager casually offer you a 2 lakh insurance for 400 rupees a year, or if your post office auntie told you about some life cover that everyone in the village is buying, you were probably looking at one of India's many government-backed life insurance schemes. Now, if you're someone just starting out with insurance or exploring something affordable for your family or staff, now this is probably the most accessible way to begin. But it's also where most people get confused. What are these schemes? Are they really as helpful as they claim to be? And do you even need them if you already have a personal term insurance? Hey folks, I'm Shashank and you're watching Ditto Insurance. We're backed by Zerodha, rated 4.9 over 5 on Google by over 16,000 happy customers, and we've helped more than 8 lakh Indians understand, compare and buy the right insurance without any spam or pressure. And if at any point you're wondering whether these government schemes are right for you or whether a term plan is a better fit, you can always book a free call with our advisors. It's fully personalized and the link is in the description. So let's break this down one step at a time. Government life insurance schemes are basically low-cost or subsidized life insurance plans introduced by the Indian government. The goal here is simple: to give every citizen some basic financial protection, even if they can't afford or access private insurance. And these schemes are often targeted at low-income families, public sector workers, or rural residents. The idea is minimal paperwork, zero medical tests, and a payout that helps the family cope if the insured person passes away. Now, the most popular scheme by far is Pradhan Mantri Jeevan Jyoti Bima Yojana, or PMJJBY. This one gives you a 2 lakh life cover for just 436 rupees per year. No exams, no hassles, just link it to your bank account and the premium gets auto-debited every year. You're covered from June 1st to May 31st and the payout happens if the person dies during that window, regardless of whether it was natural or accidental. But one thing to note is that if the death occurs within 30 days of the enrollment and it's not an accident, the claim won't be paid. So there's a short cooling off period unless it's an accident. And yes, this 2 lakh payout is in addition to any other insurance the person might have. So if you've got a private term plan too, your nominee gets both. Then there's Postal Life Insurance, or PLI. This is one of India's oldest life insurance offerings, originally created for government staff, public sector employees, defense forces, and now even doctors, engineers and lawyers. It's a bit more robust than PMJJBY. You get sum assured options up to 50 lakh rupees, endowment plans, whole life covers, and even child plans. Bonuses are also added on maturity or death, which makes it more of a savings product than just a term insurance product. But again, eligibility is the key. You need to be a government employee, PSU staff, or a recognized professional in specific categories. And for the rural population, there's Rural Postal Life Insurance, or RPLI. It works just like PLI but is targeted towards farmers, rural workers, and private employees in villages. The sum assured is capped at 10 lakh rupees and the policy types are similar: endowment, whole life, and child plans. The third one that's extremely relevant today is EDLI, or Employees Deposit Linked Insurance Schemes. This one is specifically for EPF members, so if you work for an organization with over 20 employees and contribute to your PF, you're automatically covered under EDLI. Here's how it works. If something happens to you while you're in service, your nominee gets a payout of 30 times your average monthly salary, capped at 15,000 rupees, plus a bonus of 2.5 lakh rupees. So the total cover goes up to 7 lakh rupees. Now there are no exclusions for suicide or accident here, and no premium is paid by you. It's all handled by your employer and EPFO. And recently the rules have become even more generous. As of Feb 2025, even if a person passes away within a year of joining the job or within 6 months of their last PF contribution, the nominee still gets the benefit as long as the employee was on the payroll. Then there's CGEGIS, the Central Government Employees Group Insurance Scheme. This is a mandatory deduction for all regular central government staff. It includes a life cover and a savings component. So if someone dies in service, their family gets the insurance benefit. And if they retire, they get back the accumulated savings. Again, the payout depends on your job grade and tenure, but it's automatic. You don't need to do anything except stay employed. And finally, for the Defense and Armed Forces personnel, there's the Army Group Insurance Fund, or APLI, and the Defense Salary Packages. These offer tailored covers ranging from 20,000 rupees to 50 lakhs or more, depending on the rank and service. The application is automatic, premiums are deducted from your salary, and the benefits include payouts for death in service, war-related casualties, and more. Now, if you're wondering how do I apply for all of these, here's the thing. For most of these schemes, you don't have to do anything. If you're eligible, enrollment happens automatically. For instance, if you open a bank account and tick the PMJJBY box, you're in. If you join a government job, CGEGIS covers you. If your employer registers you under EPF, EDLI applies by default. For the rest, like PLI, RPLI, you can apply online or walk into nearest post office. It's mostly simple KYC, a nomination form, and a mandate to auto-debit the premium. As for claims, it's equally streamlined. Inform the insurer or EPFO as early as possible, usually within 24 or 48 hours. Submit the death certificate, policy document, nominee ID, and in case of accident, post-mortem or FIR if needed. The insurer is then required to verify and settle the claim within 15 days. If investigation is needed, they get another 30 days. Beyond that, they have to pay interest on the claim amount as per IRDAI norms. And once approved, the payout goes directly to the nominee's account. So, what's Ditto's take on all of this? Honestly, these schemes are fantastic entry points, especially for people who've never bought life insurance or don't have access to traditional financial products. They offer basic, no-frills protection at a fraction of the cost. And for many, they're the only layer of safety that exists. But there's a catch, like always. The coverage is extremely limited, 2 lakhs, 7 lakhs, even 10 lakhs. And while that might help with short-term bills, it's nowhere close to what a middle-class family needs to survive after losing an earning member. That's why we always recommend layering them with a personal term insurance plan, one that's tailored to your income, your liabilities, and family needs. With a private term plan, you can choose your sum assured, your tenure, your riders, and lock in premiums for 30 or 40 years. You're not tied to your job, your bank, or your PF account. You have full control. If you need help choosing one or figuring out how to combine these with a private plan, you can book a free call with Ditto's IDI certified advisors. We never upsell, we don't spam. We just give you honest advice. Alright folks, that was it from me. If you like this video, please like, share, and subscribe to Ditto's channel. And I will see you in the next one. Until then, happy insurance hunting.